Analysts predict Chinese EV maker NIO to $1,000 soon. Price prediction for NIO. Since late March, COVID-19 lockdowns have been a drag on sales and production of electric vehicles, which has caused share prices to be under pressure. However, there is a glimmer of hope at the end of this dark passage. And today, we are going to discuss the many compelling reasons why you should purchase NIO stock right away. So stay tuned with stock market news. Recently, NIO was a guest of Mizuho analyst Vijay Rakesh at a brokerage event. He mentioned that delays in the supply chain are getting better and that production should be back to where it was before the shutdown by the end of June. Concerned investors in electric vehicles will find that piece of information helpful. Since the Chinese COVID-19 inflections picked up speed in March, the market value of EV stocks has taken a significant hit. Since the end of March, the price of NIO common stock has dropped by 25%. Over the same time period, the stock prices of XPeng and Li Auto have fallen by 20% and 12% respectively. The price of Tesla shares has fallen by around 39%. Other factors such as inflation and, in the case of Tesla CEO Elon Musk's potential purchase of Twitter, are also driving share prices. However, China's COVID lockdowns have also been a significant problem there. Wedbush analyst Dan Ives lowered his price target for Tesla from $1,400 to $1,000 this past Thursday, citing the challenges posed by the Chinese market. After reaching a peak of approximately 350,000 units in late February, it's now anticipated that Tesla will deliver approximately 275,000 units. This is all due to the production delays and shutdowns that have occurred at the company's plant in Shanghai. After reaching a peak of more than $2.1 billion in late February, analyst projections for NIO sales in the second quarter have since been revised downward to approximately $1.7 billion. Rakesh wrote the following in a report that was published on Sunday. NIO could see its production back to pre-shutdown levels potentially in early June. May production's already better week by week with Shanghai reopening. He anticipates that NIO's plant will reach its full capacity of 240,000 vehicles per year by the third quarter. Over the course of the past year, NIO has shipped approximately 95,000 units. According to the analyst, NIO is qualifying multiple suppliers for key components in order to avoid the potential future impact of supply tightness. In addition to the recent developments concerning production, Rakesh mentioned that the company is making headway with its advanced driver assistance software, its plans for expanding into Europe, and the price of its batteries. NIO is increasing the number of battery chemistries that use lithium iron phosphate in their vehicles. The production of electric vehicles has taken this measure, which is one of many being taken to combat rising cost. Rakesh is a member of the NIO herd. He recommends purchasing the stock and projects that it will reach $60 within the next month. This represents a roughly 264% increase from the level of $16.44 where the shares closed on Friday. The severe decline in share price has resulted in an exceptionally high implied return on the investment. NIO stock has lost approximately 48% of its value since the beginning of the year, and it has dropped 70% from its 52-week high of more than $55 a share reached in July. NIO shares have been negatively impacted by a number of factors, including rising interest rates, inflation, and concerns regarding the potential delisting of U.S.-listed foreign stocks that do not comply with U.S. accounting standards. Rakesh's point of view is shared by other people. Over 94% of the analysts who cover NIO stock rate the shares as buy. About 58% of the stocks included in the S&P 500 have to buy ratings assigned to them on average. The price target that analysts have on the average is just under $39, which is lower than Rakesh's, but is up more than 130% from where it has been recently. In early trading on Monday, NIO stock experienced a loss of approximately 0.7%. XPeng reported earnings that were higher than what was projected by Wall Street analysts, but the company's guidance for the second quarter was a little lower than what was anticipated. The less stringent recommendations were made due to COVID-19. It's possible that this is weighing on NIO share prices as well. Because the stock of the company that manufactures electric vehicles has had a turbulent week thus far, the recent increase in its share price is even more noticeable. Even though investors are aware that NIO's stock price may not be hit too hard if the company makes a bold move similar to the one a Chinese stock made today, the most recent expansion plans for NIO are reassuring investors about the company's growth potential. NIO has only expanded into one other market so far, and that is Norway. In Norway, the company first introduced its sport utility vehicle, the ES8, in September of last year, and in October of that same year, it opened a showroom called Neo House. Neo Houses are multi-purpose facilities that offer a variety of amenities and services to Neo vehicle owners. These facilities include a library and a cafe. Neo just recently completed the delivery of their 500th vehicle in Norway. According to an announcement that was made on the Norwegian version of Neo's mobile app, the company is now ready to expand in Norway and plans to open its second Neo House in the European country during the third quarter of this year. CNEV Post reports that the news came about. In addition, plans call for the opening of 2 brand new showrooms and 1 battery swap station each in Norway this year. Neo's battery swap stations are essential to the success of the company because they are the backbone of the electric vehicle manufacturer's popular battery-as-a-service program. This program allows customers to purchase Neo vehicles at lower prices if they do not include batteries, and instead subscribe to plans to rent and exchange batteries at Neo swap stations as and when they are needed. It is clear that Neo wants to build brand loyalty with additional offerings such as Neo Houses and BAAS, but the company does not want to restrict these types of experiences to China as it works to expand operations around the world. The expansion that Neo is doing in Norway is, in point of fact, only a small part of its plans for Europe for the year. Since Neo has already stated that it intends to enter the markets of Germany, Sweden, Denmark, and the Netherlands in 2022, the latter half of this year is likely to be a busy one for the company. Despite the fact that COVID-19 lockdowns in China have caused a slowdown in Neo's production and deliveries over the past couple of months, investors are relieved to learn that the company's expansion plans are proceeding as expected. The stock price of Neo is soaring today for another reason, and that reason is DiDi Global, a Chinese ride-hailing company, has decided to delist from the New York Stock Exchange, and the market reacted positively to this news early this morning, sending the stock price soaring. You might be wondering what exactly DiDi's move has to do with Neo at this point. The thing is, Neo also faces the threat of being delisted from the United States as a result of the Holding Foreign Companies Accountable Act. This law mandates that foreign companies must make their audit reports available for inspection by U.S. regulators, or else they'll be prohibited from trading their stocks in the United States. Certainly, there is a great deal more to DiDi's delisting that meets the eye, as the company was also a victim of China's crackdown on the technology industry, which has stifled growth. Neo, on the other hand, is just one of the many Chinese stocks that face the possibility of being delisted in their entirety. The key difference, however, is that Neo has already taken the initiative to list its stock in Hong Kong and Singapore, thereby giving its shareholders in the United States access to a wider variety of markets on which they can trade their shares. Investors in Neo can take comfort in the fact that, in contrast to DiDi shareholders, they will not be in a precarious financial position in the event that their shares are delisted. And that brings us to the end of our video. Feel free to let us know what you thought about it. And if you like the video, please leave it a like and subscribe to our channel for more amazing content. If you have any questions or comments for us, you're always welcome to leave us in the comment space below. Thanks for watching, and we'll see you in our next video. Have a great rest of your day.